Well, hello and welcome everybody to this week's Middle Class Investor. This is Seth Martin. It is 6:30 on March 9th, Saturday, and we have a chart of the S&P 500 index up for you. As you can see, this past week, market was down pretty substantially, I guess, for the week. This is up. Well, let's put it this way: if we close below this would be what's called a dark cloud cover or a bearish harami. Usually comes at a trend reversal, but this is a very, very bearish looking candle, and we've been expecting that probably too soon. But we've been expecting it for a long time, but it's finally here. Looks like maybe the wave 3 that we've been waiting on has started. What I want to do is I want to show you, I want to go back to the start of this downtrend, which was started last week, I think Tuesday, if I recall correctly. And one of the things that happened is, you can see here the market finished higher here, gapped down, but then ran up and sold all the way off to down here, and then ran down. I'm sorry, gapped up. So in other words, we gapped up to right here. Trying to make a straight line there. Ran all the way down to here, okay, and then closed right here. That's a very bearish day. And just no wonder that the trend reversed and started to go the other way. So we gapped up to a new high, ran all the way down here, and then finished here. So this is pretty bearish, and then we had some follow-through days. Looks like we're getting a little bit of trend reversal here. We'll have to see how that plays out, but probably, we could get something, like a little something like that. But it's likely that this uptrend is over. Now, we won't really know for sure until something's going on with my. Bear with me just a second. Let me see if I can get out of this. There we go. So we won't know for sure until we kind of break this area down here. I'll put it on the chart. So once we break through this area right here, then we'll know that we're officially in a downtrend and heading lower. I'm going to take this one off. Just doing a little housekeeping here. Leave this one on. So we've got, it looks like we got a trend reversal in the making, and we'll see how it plays out. We'll see if it makes a 3 or if it makes a 5. Now, the degree of trend, it wouldn't complete a 5 until it came out here and make it a new low. So we'll have to look for a small degree 5-wave move and kind of see if this is the right direction. But right now it appears to be, and so that's the way we're playing it. That's why we're talking about it. Okay. All right. Let's look at the 10-year yield. 10-year yields continue to retreat, which is odd, but it is what it is. I mean, we could take out this low here, especially if the market continues to sell off hard. It's easy to see that money would flood into the bond market and drive yields. And drive yields lower in this move down here. But I don't think they're going to go much lower than this 2.5. So even if they do go lower, I don't think we'll see them go much lower than this 2.5 area. Let's look at the shorter term yields. A lot of talk about the Fed again. We've kind of, we've been talking about this area right here. Let's see. Let's move this and scoot it a little further out this way. We're still not technically broken out of this, but we continue to watch it, and it looks like it's flirting with it. I suspect if it does break out of this, you're going to see the markets get very, very negative very quickly, because the consensus is the Fed has stopped raising rates, and if this jumps out of here, the Fed will continue to raise rates, even if it hurts the economy. That's just the way it is, and so they're not gonna let the yield curve get too steep between what the banks borrow and what the banks can collect in interest. That's just not going to happen. Let's go back. Let's look back and look at volatility. You can see volatility is still very low. I mean, this is historically very low, even with the selling that we had last week. Let's go back to a weekly chart. Even with the selling we had last week, volatility barely ticked up at all. So I think there's just still a lot of participants out there that are going to try to buy the dip, and that's the way it is. Everybody comes to the realization of a bear market, one by one. It's a slow realization. All right, here's Germany. See, they kind of went negative too. Of course, their positive didn't go up as high. Let's look at Japan. Same thing. Their positive didn't go as high, but their negative looks just as negative. Let's look at the United Kingdom. United Kingdom went probably about as high as we did, and their negative looks kind of less negative. So I don't know. It's interesting. Everybody thinks the UK is just going to crater without the European Union, and I'm just not so sure. I'm not. A lot of times, whatever the consensus is wrong anyway. So I'm just not so sure that's going to happen. If you ever watched Brexit, the movie, the European Union was treating Great Britain really rather poorly. I mean, they would throw them some money every now and then, but man, they were telling them they couldn't fish in their own waters, and just, I don't know, there was a lot of stuff that was just not. It was just kind of anti-sovereign, anti-freedom stuff, and I think they're going to be better off without the European Union. I think the European Union ultimately is going to fail. Oddly enough, maybe because of all the immigration stuff. They just can't. They're not going to be able to control that immigration, and so eventually the culture will radically shift, and eventually the whole experiment will probably fail. That or debt. The fact that Italy and Spain and those countries, run higher deficits and higher levels of debt than Germany and France and some of the northern countries. It's probably going to start creating a lot of stress for the economies there and the people, and probably going to end up in a big fight. That's historically what happens in Europe. So we'll see. That could be wrong as well. That's just a guess. All right. What else do we have here? We looked at the 10-year Treasury. Yeah. So let's switch over onto the TOS charts and look at gold. And let me get my key up here. I'm going to type it in because my link somehow quit working. But here's gold. So clearly gold is in some sort of triangle, some sort of A, B, C, D, or A, B, C, D, and now we're in maybe E. And then it'll probably resolve itself up. So if you look at, let's go to the weekly on gold. So you can see here we've kind of got it resolving itself. Whoops, it's just not working. Let me do it like this. You can see how we've got gold resolving itself into this area here above the triangle, where this was A, this whole triangle is B, and then this is C. So you got gold potentially going up here to 1500, 1550. So we're going to make a pretty good run, and now the run down is not quite over. So if you're looking at, well, where's gold? Where where do I look at getting in? Well, you need to wait. Whoops, let me get that off the screen. You need to wait until this is finished. So how's it going to finish? It's going to finish in an ABC. So you'll have a down, up, down sequence to about maybe right there, maybe around 1250, 1270, somewhere in that range. In fact, let's just we'll put a little box on there, but I'll put one on there more permanently here in a second. I would say it would get down in this range, and then you're going to see gold, make its way higher here. But it's gonna go a little bit lower first. That's how the triangle here needs to resolve. The good thing about triangles, it's hard to identify when you're in this area, but once you get into this area, once you identify that you're in a triangle, it's pretty easy to then figure out, where you want to enter and then what your target should be. So it's kind of the little bonus of a triangle. So while I'm on this screen, let me go ahead and put a box in here around, let's see, there's 1260. Let's put it right here down in this area. So somewhere in this area, this should end and then start to rally. Okay. Silver's doing something a little different, but ultimately they'll move in tandem. So and silver in its wave C could run quite a bit higher. I mean, it might run up to this 25, even to $27 area. So if you're gonna trade one, silver's probably got farther to run in terms of distance and how much you can make. Now it might stop here, kind of off this pivot, but it could run as high as this $25 area. So keep that in mind when you're just trying to decide, which one you want to own or which one you want to trade. Let's see. Let's look at oil. Oil, I think's my hot links are not working there. I type it in. So oil, also could be in a triangle, and we drew this line down because we thought, maybe this is complete, but that doesn't look. If you look at this carefully, one of the things you start to see over and over again is the market doesn't just go straight down, right? So this is probably an A of an A, B, C. So oil could still go a little higher maybe, but ultimately resolve itself down here below $40 a barrel, and then start to make the next leg in the triangle. That's probably what we're looking at. I don't know. It could be finished there. I mean, that's certainly possible. But it looks like this is the low. So this in other words, we're in a larger ABC. So this is A down, B, and then C. But C is here's a 1. This is all 2. And then this whole thing is 3. 1, 2, 3, 4, 5. That's 3. And then we've got a 4 happening. And this 4 very well could be a triangle. So, you can see an ABC, 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 just so on and so forth. So, and then that would resolve itself lower, down below this low, believe it or not, below $33. And then probably you're never going to see oil that low again. I mean, that's probably the low forever going forward. Oil, in the futures there's always going to be a supply and demand element to oil, but it's going to increasingly probably become a monetary type of effect until the petrodollar goes away. In other words, the agreement between the Saudis and the U.S. is that the Saudis have to sell oil in U.S. dollars, and eventually that'll break down because it's not in their interest to sell in U.S. dollars forever, especially if the United States is destroying the dollar. So, but like I said, oil is probably going to go down below. It's already gone below this low, but it'll probably go down below this low. Maybe around 22, somewhere between $20 and $24, something like that. So keep an eye out for that, and we'll now for the euro, I want to go over to my other charts. I got the euro here on a daily. Let me go to a weekly first because I want to show everybody something. Something come up. There it goes. Okay, so let me clear the chart. So, every now and then when I show you these decision points, the question is where do I put one? Do I put it here? Or do I go back to this one and put it in? How do I know? So let me talk about that again. I've talked about it before, but what you want to do is you want to look at the more important high. So this was a long swing down into a low, and then it made this high here. So this is the important pivot area right here. So what we want to do is we want to capture that one and then scroll over. So, and then we'll go back to, so we're on a weekly, we'll go back to a daily. And then I want to show you what happened here at that decision point area. There's this volume spike that happened. So what's a volume spike? Well, a volume spike is where you take out an important low. So you would go back to another time frame and look at this low. And this low right here was taken out on this bar with high volume. Okay, but then the next bar was a buy bar. So you get a potential volume spike trade. And that would run, probably somewhere up in, well, we can just click it. Let me click trade setup. Yeah, so up here to 1.14, which is, $790 risk. That's $2,232 in reward. Now, what you could do is you could wait and see if we get a bar that pulls back a little bit, and then you could enter on a lower bar and reduce your risk some and increase your profit. That's what I like to do sometimes because I didn't catch this. I didn't enter here. So not only that, but $790 is a little bit more risk than I usually like to take. So what I'll do is I'll wait till it pulls back, and on another blue bar I'll enter, but try to enter down here where the risk is about half of that. So that's a good way to handle that. What I want to do is I want to show you the ES on not that chart, not that ES chart, not that one. I got several ES charts, sorry. Well, let's show you the SPY instead. So let me go to a daily, and you can see here that I've put in, this is a 1, this is a 2, this is a 3. So the question is, where's the target? So if we were looking for a wave 3 down, which we're likely to get, if this is the start, this is 1, this is 2 up, and then 3 down. So typical wave 3 would take us well below here, but then look where, minimum wave 3 would take us there. Typical wave 3 would take us there, and then maximum wave 3 would take us there. So, so we could be in for some decent selling here. There's still a little bit of strength on the strength band here. So, but it is curling over. So, I don't know that that's really going to matter. We'll just have to wait and see. But we are looking at, pretty sharp. I mean, as sharp as this was, it could go in half the time. This was about, I don't know, I want to say it was like 60 days here. So this could be down here in 30 days. So keep an eye out for that. That could be pretty traumatic for your 401k, and we want to caution you against those types of things before they happen, so you can at least have an opportunity to make a decision if you need to. All right. Just looking to see if there's anything else. I want to go back. I want to show some stuff on the Elliott wave because I want to show you some of the divergence. This is from Friday, March 8th. And I'm not going to read this, but one of the things I want to show you. So this was the, this was the wave one down. You got this. Actually, I think I counted this as the one. I don't remember what I did, but they're showing this as a flat. So wave one down, then an ABC flat two. But really, what I wanted to show you here is this. This is a 10-day moving average of the range and advance for the day, and you can see that the advances were kind of diminishing over this 10-day average until it dropped below this this kind of magic 50% line that they follow. The other divergence that was going on is this is the CBOE, that's the Chicago Board of Options Exchange composite put call ratio. So what they do is they look at the number of puts versus the number of calls. Now this is inverted. Normally the curve would be the other way, but they invert it so that it matches the market. And you can see that the put call ratio was getting, in this case, the call put ratio was getting way crazy. I mean, it was getting very high. In other words, when you're looking at this, what you're looking at is at the highs, people are buying call options and betting that the market's even going to go higher from here. Okay, so that's what they're saying. Here, what's happening is at the lows, there's hardly anybody buying calls right here. In fact, they're buying puts. So what happens is it's like I've talked about this analogy before, but it's like a boat where everybody gets on one side of the boat and there's just too many people on one side of the boat and the boat flips. It's the same thing in the market. As the market was going down, more and more people are buying puts, but fewer and fewer calls are being bought. And then the market turns and starts going the other way. And then, of course, option buyers and sellers are very nimble, so they turn around and they start buying calls. But the whole way down, as long as they're down, they're pressing by buying more and more puts. Just like on the way up, they're pressing as the market's going higher, they're buying more and more calls. They're trend followers, okay, which is fine. There's nothing wrong with being a trend follower. In fact, trend following is a pretty good strategy. It works really well. But where it doesn't work is at the turns. So you have to be very. One of the things you have to do if you're going to be a trend follower is you have to be very decisive at these turns. You cannot, if the market starts to turn and go the other way, you got to get out of your trade and move with the market. Excuse me. So this was one of the divergences that was happening that I was talking about. I think that's the only one they show. And then this is the count they show. 1, 2, 3, 4, 5, 1, and then ABC flat 2. And then we should be in some sort of 3 down, and there should be at least 2 degrees to trend, maybe 3. So that is really all for this week. Again, I didn't come in last week. There just wasn't much to say. I mean, I guess we could have come in and said, well, there was a doji. Doji usually reflects indecision in the market. In fact, let's let me pull. I don't know what I've got, a tickle or something. I can't get rid of it. So if we look at last week, let me just zoom in on it real quick since I brought it up. See the open and close. There's almost no range between the. I mean, there was a range from high to low, but the difference between the open and close was hardly anything. That's known as a doji. Doji is like a Japanese word for indecision. It just means that momentum's starting to slow and people are indecisive about whether to continue to go long or start taking risk off and looking to go short. And so a lot of times you'll get several dojis, like this is kind of a, hold on a second. Like at this top, you kind of had a narrow range and then a narrow range, and then, they were all about the same, and then it fell. It's kind of unusual for it to just fall after one bar, but sometimes that happens. I mean, look here. See, the market went up. You had almost the same kind of candle here as you have over here, and then it gapped down and started to go down. So this candle here, though, is more bearish than this candle here. This candle here is a pullback type candle, which is what we got, a pullback. This candle here is a trend. It's not for sure a trend reversal candle, but it's more times than not, it's a trend reversal candle. So keep that in mind. And if we are reversing trend, then this really shouldn't even slow down until we get to about, what is that, 23.20 or so on the market. So at 23.20, we'll know again, it may pause for a little bit and then continue down, or it may pause a little bit and then start rallying back up. So you just have to wait and see. All right, everybody, thanks for coming in this week. That's it. Probably be in next week. Now that this is, the momentum is slowed and we're starting to roll over, it could get quite exciting to the downside. And I think there's going to be a lot of news. It could be, the ranges could get quite large, like these right here, and that's always exciting to watch some CNBC and listen to them flounder around about that. So, all right, everybody, thanks for coming in, and we'll talk to you next week. Bye-bye.